Welcome back. Well, the World Bank says due to high inflation, richer Nigerians have lost more purchasing power than poorer households. Washington-based financial institution disclosed this in its June edition of Nigeria Development Update Report. Joining me now is Charlie Robertson, head of macro strategy, Firm Partners, joining me via Zoom. Great to have you on the show.
Thank you very much for having me. It's a pleasure to be here again.
Fantastic. So what do you make of this World Bank report saying, because normally poorer households seem to be worse hit, with inflation and all these reforms we're seeing as incomes are already squeezed. How do you see this report by the World Bank?
Well, to be fair, it's the poor which matters more to institutions like the IMF and the World Bank. They will be still concerned that with high inflation, people don't have the means to protect themselves when the currency weakens. They don't tend to have a stock of dollars. They don't have any pricing power for wages because you've got 5 million Nigerians entering the labour market every year. So what space do you have to go and demand more pay? It's really tough. So, the report's looking at all segments of society here, but I still think the IMF and World Bank will be saying there needs to be mitigation. There needs to be some support for the poorest, a redirection of that money that was spent on the fuel subsidy towards those hit hard.
And looking at, the way the economy is run here, do you think the poor will actually get, some kind of support, with all these reforms we're seeing? Do you see that happening?
There's been a lot of preparation already from the World Bank side. They've been talking about this for well over a year, that when the fuel subsidy goes, there needs to be directed support. And the World Bank is prepared to step in and do something along those lines. So, yes, I think there'll be help. Will it? I don't know how it'll feel on the ground. I think a lot of people are going to be struggling right now. But there should be support coming, yes.
It is quite tough, having to buy fuel, paying over 100% for fuel right now. It is really, really tough on the ground right here. But let's look at the debt profile now with 49.85 trillion naira debt stock right now. What are you seeing for Nigeria's debt servicing obligations with the reforms we're seeing?
The reforms have been absolutely vital. So my concern was that Nigeria was heading on the road to default. And I think what Tinubu's done is he's done a kind of a handbrake turn. You just don't see changes quite that dramatic very often. It's very, very impressive because with 100% of revenues, federal revenues, going on interest payments, everything the federal government had was going on interest payments, and the government was borrowing more all the time. And there was this unaffordable fuel subsidy. It was going to crack. And if it had cracked, my concern was the Naira, we wouldn't be talking about 700 or 800 to the dollar. In a few years' time, we'd be talking about 3,000 to the dollar. That's what a default would have taken us down that road. So he's done a dramatic change there, and not spending the money on the fuel subsidy. That helps to improve the debt metrics. That improves Nigeria's credit rating outlook. The whole story just gets so much better. And the weaker currency, of course, then means more money from oil, more Naira anyway, from selling oil, which gives the government, again, this boost, which is much, much needed.
And talking about oil, looking at the oil market now, there seems to be some kind of downtrend, at this time. If this continues, how does that impact, us making more dollars, in that oil market, going forward?
But this is why having a flexible currency that can weaken when the oil price goes down and then strengthen when it goes up again, that's why this is such a big deal. Angola's just done the same thing. They've just weakened their currency significantly in the last 2 months. And I think that reflects the weakening oil price. So at least in local currency terms in Angola, the government isn't going to be worse off. They don't have to cut spending just when the oil price goes down. They can keep it running at the same sort of level in local currency. And that's what Nigeria now has the flexibility to do. I think it's the better policy to have.
Right, and with the FX market unification, are foreign investors ready to, pack all of that cash into the Nigerian economy?
I was talking to investors just on Tuesday who have brought money in to Nigeria since the currency flexibility has been restored. And these are people who hadn't been investing there for years. So yes, but most investors, the big money, I think, is still saying, we've got inflation over 20%. We've got interest rates closer to 10%. That's not great from our perspective yet. So you need to get interest rates higher. And the same way that America's having to raise interest rates because of inflation, Nigeria too probably has to raise interest rates quite a lot. But when they do, then foreigners come in and lend to the government in Naira. So the foreign exchange risk is all with the foreign investor. It's not with the Nigerian government anymore. The last few years, it's been borrowing a lot in dollars, the Nigerian government, and the exchange rate risk has been put on the Nigerian people. But once you can start borrowing in Naira, it takes away a significant risk for the government and Nigeria's people.
And the president did, indicate that in his speech that the interest rate right now is too high. So that kind of means he might be, looking at reducing interest rates, going forward. If that happens, what's going to happen to the economy?
I can't see how that would work. That's you've done this. The policy change has been great in terms of saying we now have a currency level that is realistic. In fact, I think it's a bit cheap. I think the Naira is a little cheap at 750 or something. It should be close to 700 on my model. But that it doesn't work with falling interest rates from here. I agree we want interest rates down in Nigeria, but the way we get there is after inflation's been conquered, after inflation's been brought down. And to do that, you probably need the hard medicine of higher interest rates.
Right. I guess the battle against inflation continues globally at this point. Well, thank you so much, Mr. Charlie Robinson, Head of Macro Strategy, FEM Partners. Great having your perspective today.
Thank you.